Before we go and dive straight into the world of business, I'd like to let you know that you're very welcome to come along with us. You can join the conversation on WhatsApp 0809 444 0981. I'll take that again 0809 444 0981. Also on Twitter, so follow us at Smooth981FM and use the hashtag Business Express 981. Ask your questions, give me your dissertations.
Rainmaker, what's up? Okay, so Jolami, by the way, is from Afro Invest. Just to put that out there. So the market actually was positive yesterday, 0.67%, 32,406 points where we closed. We're back above the 12 trillion naira mark as far as market cap is concerned. Japol oil was the top gainer yesterday, 9.5%. Who remembers our episode with Japol on the stock market? Top loser, down by 10%, was First Alumina Nigeria PLC. So hopping into the stories of the day, Jolami, there's an interesting article here from Bloomberg saying juicy Nigerian yields may just spare banks from profit pains. And they're talking about yields for emerging markets and how Nigeria seems to be pretty attractive. Well, what do you make of the article? What are they talking about there?
This is not a new story. So if you think back to 2015,
Yeah.
2016, and 2015, you had an issue with the banks making quite a bit on FX revaluation gains, with the FX issues we were having. And the next year was sort of like, oh, how do they make up this sort of profits given that that's out of the way now? And what you find is that they had very, very attractive yields. So banks sort of played in that, played more on investment securities than creating risk assets. And the same issues sort of are prevalent now, where you have NPLs at a very high level. And risk asset creation in this sort of environment is expected to be weak.
Okay.
And so the buffer you're gonna get from the buffer you get or a bank sort of gets comes from investment securities. If they can put more in investment securities to sort of boost overall profits, that's what you see. So that's what the story is basically saying.
Okay.
And it's what we would expect in a year such as this. What you saw at the start of the year, you saw yields as high as 17% on treasury bills, 1 year treasury bills. That's a discount rate of about 15%. And so I would expect banks to play, to put more money into that. Although there is going to be a need for certain level of risk asset creation just to sort of make up the profit levels because it's quite attractive. I mean, you saw Zenith Bank release
their results
yesterday, PAT of about 193 billion. So even come close to that number next year, you're going to have to create some risk assets beyond the investment and obviously the high yielding instruments.
Okay, and I noticed that the article talks about how it's the bigger banks that are able to play in that space. So the tier ones, they mentioned Zenith, they mentioned GTB. For tier two, they may not be able to scale as much as the tier one banks to be able to park that much money in securities.
Yes, it all comes down to the size of your balance sheet,
right.
And we know the tier one banks have the larger balance sheets to really play around these things. And so that's what the article is really coming back down to: who has the balance sheet to take advantage of the sort of yields we're seeing in the market and really have that affect profits measurably.
Okay, now this is one thing that a lot of folks, and you put it very politely, as far as them focusing more on investing in government securities versus creating risk assets. It's something that my listeners have complained about. They keep saying that the banks in Nigeria, they are not essentially doing what banks are supposed to be doing. That it seems that their own is just to take a lot of money, invest in government securities, make a lot of money from there, and they should be focusing more on loans and so on and so forth. Because even in the article, it says that credit has kind of come down, credit to the private sector and so on. But if I was to throw that to you, you would say, well, what are they supposed to do? It's the environment that they're in. Yes, would that be the argument?
It is a very, very risky environment.
Yeah.
So at the end of the day, banks have they need to make money,
right?
And an NPL has a very, very negative impact on a bank because at the end of the day, they're paying for deposits which they don't make interest on.
Right.
And at the end of the day, that's a risk to the financial system as a whole. So it's actually very prudent of them to reduce lending in certain environments,
right,
and look for the best avenues to generate profits also in those environments. And what you're going to find is that as the environment becomes less risky, you're going to see more risk asset creation, which is what I was alluding to before. That as the macros are stable, as the environment is more stable, you're going to see more risk asset creation. So while we saw about a 1.6% decline in risk asset creation or loans and advances at the 9-month 2018 period, what we expect to see is that through the year, you're going to see measurably a little bit more risk asset creation through the year.
Okay. Now, what? Sorry,
Okay.
real quick. Just one more thing, Jeremy. So I've been campaigning forever on this show on single-digit interest rates. I cannot dream of seeing that anytime soon until things change in the environment. We're still going to be at your 20-something, 28, 29, maybe 30% interest rates on loans. Yeah. Yeah.
I mean, there has to be a structural change for that to happen. I mean, this is something that comes up from time to time. If you look at where inflation is, where you look at the risk in the environment, then you sort of realize why there needs to be why interest rates are at the level they are.
Right.
Because nothing happens in a vacuum.
Right.
It's a structure upon which they've built the interest rate they expect from the loan, and so you have to start from where the base interest rate is, where inflation is, and and what the sort of risk environment is. So that's why you have yields at interest rates at the level you have it. I mean, that's why I said that there has to be a structural change. So as you have the base interest rate come down, as you have inflation trend down as well, what you're going to find is that interest rates will naturally come down as well.
Ah, okay. All right. Go ahead.
Let's go on to our comments. We have this from WhatsApp. Bala here saying, let's not blame the banks. They are profit-making organizations. It's our monetary policy that we should focus on. Our current monetary yields are not sustainable for a country that seeks to meaningfully develop.
All right. Thank you for that message, Bala.
Thank you. And this one has no name. Please, when you're sending your messages, if you'd like us to read it out, please put your name there. This is from Olalekon. Olalekon says, morning guys, what's the gist of the recent partnership between Sterling Bank and Badia Bank?
I haven't. I need to actually get some more info on that as far as the partnership between the two banks. I'll get more info. I skimmed over that bit of news, so but I'll get back to you on that one. Message from Chidi.
Yes, Chidi says, hi Rotus, what's up with the MTN and CBN issue? I'm surprised the way everything just died down.
Okay, yeah. Well, Chidi, the latest news was that on the tax side, you know, they came after the Attorney General came after MTN saying that they hadn't paid $2 billion in back taxes over the last 10 years. The case has twice been adjourned in court, so I think the latest date now is March 26th or so. So that's what we're waiting on. And then on the other end, the repatriation of funds, I think they've settled out. So I think MTN is paying $50 million, I think, and they've also said they're going to list via introduction on the stock exchange. So that's towards the end of this quarter. So that's the news with MTN.
All right, Bukola, thank you very much for putting your name there. Despite the noise and adoption of IFRS 9 and impairment impact expected credit loss model, how come Zenith reported a lower impairment in 2018? We expected impairment to go up.
Okay, so I suppose we're going to jump into Zenith's figures now, yeah?
Yes.
Jeremy? Okay, so why don't we... Okay, well, you have another message? Okay, go ahead.
Yinka here says, let me help you, Rotus. Lending or no lending, the difference between our banks and armed robbers is the equipment the latter carries. Yinka really in its line of work. I have the opportunity to see how banking works in some Western countries. And trust me, we have here, what we have here is far from it. You take loans from some banks here, and it's like you signed up to modern day slavery.
Right.
Guess what? Zenith sent a mail that for every transaction above 1,000 naira, I will be charged 50 naira.
Yinka is not a happy person.
Not happy at all.
Yinka is not happy at all. All right, but Yinka, hey, look, that's what the messages are for. Please, everybody, vent and express yourselves. All right, Jeremy, let's hop into Zenith's performance. Decent performance, yeah, for in tier one space for them.
Yes, it's a really good performance. And breaking down the performance, what you see is revenue is down, and that comes from lower non-interest income.
Okay.
And so I'll just break it down. So the interest income was actually down.
Okay.
Down. And that's as a result of lower loans and advances.
Okay.
And I mean, loans advances did go up at the end of the year, but what you find is that most of it happened in the last quarter of the year, and it was eventually channeled towards investing in investment securities, which, like we spoke about,
right.
I mean, is what you would expect from the bank in this risk environment. So interest income was majorly driven by it's mostly loans and advances and investment securities. So that's what they were able to drive it from. And interest expenses were down quite significantly. Interest expenses were down primarily because the bank sort of shifted from high cost to lower cost deposits. So what you have is their CASA deposit, which is the stock of low cost deposits they have, increasing all through the year. We saw it go to 85% at the half year, 86.8% at 9M, and it went even higher. So that's why they were able to sort of balance it out, because if interest income comes down but your numbers are still looking very good, it means that you've managed your costs. OPEX was down as well. And by the time it comes down to the bottom line, what you're seeing is very, very impressive 197 billion profit after tax. Now, speaking to the issue on the credit losses.
Okay, so Bukala's message, yeah?
Yes, so what you found is that in prior years, the risk was quite a lot higher. And what you have is that you push out more impairments.
Okay.
But as the environment becomes less risky, you push out less impairments.
Right.
Because at the end of the day, it comes down to speaking specifically about IFRS 9. So what you had is that in the initial adjustment on IFRS 9,
okay,
the adjustment was made through retained earnings.
Okay.
So that's where those impairments were passed through,
okay,
and it doesn't even happen at one. It doesn't even happen in 1 year. It happens. It can happen over a number of years, as prescribed by the CBN. So what the effect that he's expecting to see, you can see in the capital adequacy ratio, which is down to 25%.
So that's why you
so
see
that's
it
where
coming
the
down.
initial, because retained earnings is in your tier 1 capital. So that's where that adjustment was passed through.
Okay. Good stuff. How much more time do we have?
We have 20 seconds left.
So let's use Rainmaker's message to end the show.
He ends with a question, but I'll go with the comment first of all. On Sterling and Badia. So Sterling got funding up to $65 million to show up business for the Arab countries.
Okay.
It's in 2 tranches. One, $15 million. The second, which will come later, is the net $50 million. He says that's just the brief.
Okay, thank you, Rainmaker. Okay.
Rotus, when will China renew their yuan currency swap agreement? We have exhausted the first batch.
That is a very good question. They're supposed to extend it over 3 years or so, but there's no news on when the extension will take place.
All right.
Jolomi of AfroInvest, thank you so much for joining us today.
Thanks
really
for having me.
Thank you very much, Jolomi. Thank you, Rotus. You can join Rotus same time tomorrow morning, 6:45 for Business Express 981 here on Smooth Breakfast.
Faster than I expected. Thanks. I'll probably come back and try. I know that there's some more messages. Maybe I'll address them tomorrow. Yeah.
Okay. All right. Thank you. So we have a live appearance at 7.
Okay, that's coming in. Okay, cool.
Quick Teller. Everyday payments made easy.